All right, but it is time for Mish Schneider. We've been keeping her waiting too long. We see her hanging out backstage. So let's go ahead and welcome Mish with our very special pre-market prep. Welcome. Good morning, Mish Schneider. I'm very sorry. I know your favorite part about on the show.
It's okay. I just want to make sure you can see me, and I realize my chair is a little low. So
we can see you, but I was apologizing because you can't see Joel right now, which I know is your favorite part about coming on the show.
Yes, of course.
How are you doing this morning?
I'm doing great, Aaron. How are you?
I am good. So, all right, we're heading into Labor Day weekend. The summer, obviously, people are traveling more, people are spending money. What are you seeing just in terms of the American consumer right now?
Surprisingly resilient, obviously. We've talked about this now the last few times on the show. I think we've seen a shift in the consumer to a degree, and that shift will continue as we get into 2025. And that is, I've kind of coined the phrase, it was all about we, now it's all about me. I think the staples, obviously, section of the market is doing unbelievable. NVIDIA gets all the headlines, but really Costco has been, I heard you talking about it. And we were there on Sunday in Albuquerque. We don't have one in Santa Fe. So we actually have to drive an hour to get to the nearest Costco. And like you said, it was insane in there. But that really tells you, I don't know how much of a savings, because people go in there and they spend hundreds and hundreds of dollars.
Oh my God. Yeah. I went in there for like a few things and I end up walking out with a bill over $500. You feel like you're prepping to go into battle when you're going into a Costco over the weekend. You got to like mentally prepare. You get everything you need. You're like, all right, well, we might be stuck in here for 2 hours. Does everyone have, food, snacks, water? I mean, it's a...
I go there for the snacks, though. So I bring my kids intentionally there at supper time, and we go and we try to find all the little, obviously all the little places you can try the food. And we go here or there. And then we sneak around and we try to go back to the other one because it was pretty good. And they're like, were you just here? No, it wasn't us.
Hey, Mish, Joel here, working from a remote location because of a big storm. But, we talk about inflation and, we got some numbers coming up in a few weeks with the CPI and the PPI. The Fed seem to relent, but one word people don't like to bring up and talk about is stagflation here. And, is it fixable here? Are we kind of, with rates coming down now, unsure that we whooped inflation? Or is the Fed putting itself in an even stickier place than it was before?
I'd say it's very possible. And you're right. Stagflation seems to be the dirty word. Nobody wants to use it. In fact, when I've gone on like Fox last week, people are saying, how come you're still saying in stagflation, you're the only one? And I understand that, not the only one, but it's very unpopular because nobody wants to deal with the potential reality of that. And we're seeing exactly that, the stagnation of the economy. Yes, we're seeing consumers are still out there and they're shifting, but you don't know how sustainable that is. Or like I said, it shifts next year more, I think a lot because of the obesity drugs that we talked about. But the other parts of the economy are certainly starting to show strain. And the inflation, I mean, that's also controversial because people say, oh, it's disinflation. And certainly it depends on where you look. And we're still seeing some record highs. Coffee made new all-time highs. Cocoa's been creeping back up. Real staples like butter is screaming up on the charts. So I say in terms of the inflation part, I have that trifecta of things that I look at. And so I haven't necessarily been screaming from the rafters yet because those trifectas haven't really played out, but they haven't sold off much. So one, of course, would be oil. And we're looking not at Brent, but at WTI oil over $80. It's tested it a couple of times. It's retreated. But if it does get through 80, concerning. And Exxon came out yesterday and said all types of energies are going to be extremely necessary as we go forward to be able to fuel the energy needs of the world. Second would be the silver to gold ratio. So we know that gold sort of took over against the silver. But if silver can really clear $30 again, it's been teasing that, then that too could actually put a real big upward swing into silver. And the third, I know people hate to talk about it, but it's sugar. And sugar right now, there's been some drought in Brazil, some drought in Vietnam. Those are two big sugar producing countries. Sugar has just crept back up over 19 cents a pound if it gets to like over 20. So right now they're dormant, but they're not selling off. And I think that's what we have to look at as we're going forward in terms of the inflation part.
Mish, so I know you got your notes. This isn't directly off your notes, so we can skip this and go back to your notes if you'd like. But this morning, we were talking about Abercrombie and Fitch's earnings report, and the numbers were good, but the company warned of a increasingly uncertain environment. Is that something you think we can start to come to expect from companies? Even the ones that are doing well and reporting good numbers are saying we don't really know what to expect, next quarter or the quarter after, because there's all these question marks around the consumer. You said, the American consumer has remained surprisingly resilient. And I think some of these companies themselves are surprised that, with all this uncertainty, they're still doing well. But of course, we know the market doesn't like that uncertainty.
Well, I definitely, again, if we go back to the idea of stagflation, we'll see more stagnation as if the consumer gets more stretched and some of these big chain stores like Abercrombie start to sell off or not see as much profits. But we haven't seen evidence of that yet. And so I'm not terribly worried about that part of the market because people have also an attitude of YOLO, right? You only live once. And that's why people are going out and spending money against credit cards, using some of their savings up. I think a lot of people have more money than what they haven't necessarily moved much because of the interest rates. If they come down, we see the housing prices are still really, really high, even though so many pundits called for a housing crash that hasn't happened. So, I don't know, you're really talking more recession, I think, when you ask that question. Do we have a possibility of recession, in which case then, new ball game? I wouldn't dismiss it, but right now I'm not terribly worried about it, which is why stagflation may not necessarily impact those big chain stores the way one would think during a recession.
And then, so you mentioned some different commodities. We talked about, sugar, cocoa, coffee. What about oil right now? Because I like to watch the price of oil and use it as kind of a barometer for what's going on with the, global economy. You see oil dip a lot of times when we're worried about the Chinese demand or stuff like that. What are you seeing with oil right now?
Well, it's a range-bound situation at this point. If it gets anywhere near $72, $73 a barrel, you see the buyers coming in. As soon as it's getting up closer to $79, $80 a barrel, you're starting to see the sellers come in. And it could stay like that while the market is waiting for certain things to play out. One, of course, would be OPEC Plus, that still has cuts on the table. The other, of course, will be the election, because there's a perception, I don't even think it really is true, but there's a perception that Trump would be into drilling and creating more oil, whereas the Harris administration would not. It would be more alt energy. I think that's kind of silly to play it like that, but it could have at least a short-term impact. And then, of course, there's a lot of stuff still going on in the Middle East and Libya. The other day when oil popped, the story was that they stopped production and exporting oil altogether. And now today I'm reading that it's more like they've curtailed production. So, there's powder kegs. So that's why I wouldn't touch it until we either break out over 80, or maybe if you were so inclined, I would not short oil, but if you were so inclined to be short, if it can't get back over 72, 75, if it starts to break down, then maybe you'll start to see numbers closer to 65.
Mish, what about gold? Gold making new highs recently. It's down this morning, but I mean, unbelievably resilient here. Do you think this gold rally continues? And maybe it can even tie in, and obviously with inflation going down and interest rates potentially going down here too. How does that affect gold?
Well, gold is reacting to everything positively, right? I mean, this has been the ultimate flight to safety. So gold has gone up because of that, because of a lot of accumulation from other countries. including China, of course, but also because people are concerned about credit events. There's still the Japan story out there, even though, we get these stories now and then they just sort of go away, but do they really go away? The gold has been sort of the mirror of everything. Every time it looks like things are really improving, gold sells off a little teeny bit, but then it goes right back up because gold, like I said, is that mirror and it's reflecting cracks all over the place. Now that's going up without a real inflation story. So then, of course, if the Fed, and this is going back to the stagflation, it makes it so tough for the Fed, because if they reduce the interest rates by 0.5% and then they keep reducing to stimulate the economy, what they'll really do is, of course, stimulate inflation. And if they don't cut very much, are they really doing very much for stimulating the economy? And so it's going to be a while for that to really settle in, I think, from an economic standpoint, which means gold should stay in favor. And of course, we can't even forget now that, I don't know if this is true or if it's going to be true, but people are saying that the election is going to be incredibly contentious, that and that could create a lot of problems, and that could really wreak havoc in the United States, in which case, once again, people will flock to gold. So right here, it's about 2,500. It's going through these areas of $100 levels. So, at 2,100, it broke out, then it tested it, then it got up to 2,400, it went back down to 2,250, then it got up to 2,550. And now, so I think you have to play. This is a good one to buy the dips until the mirror cracks. And right now the mirror isn't cracking. Gold is reflecting the cracks under the surface, below the mirror.
Mish, before we let you go, you always come with us for a couple picks, some with perhaps, some patterns that are forming. You also got a long-term hold that you want to share with us. Not sure what you like about Rivian, but hit us up with 4 or 5 stocks that you're keeping an eye on.
Well, Rivian is probably a longer term play. I've been accumulating it for the clients and even personally between like 13 and 1450. We have a position that we would be willing to add to if it can actually clear 15. A couple of things I like about it. I think with all of the tariffs on EVs that countries are starting to impose, this is a good company to look at longer term. Is it a competitor to Tesla? Well, obviously Tesla trading at 205 versus this trading at 1450. You can see that it's not, but they are looking to expand. I think maybe the worst of the news is over. And so from a technical standpoint, I think you have a low risk, and I think this stock can work its way up over years. So it's kind of one of those things that you buy here cheap and you put away.
Any other individual names you'd like to discuss, Mish?
Yeah, well, there's a couple. With the interest rates potentially coming down, although it seems like that's a given, we're looking at SLG. It's a real estate stock. A PLD is another one like that, Prologis. But yep. SLG has my interest. Look at that nice. Did you just have the chart there for a second?
Yep.
Yeah. Look at that nice base that has formed, and now it kind of broke out after it formed the base. Yes, is there resistance coming up? But this is definitely one that if we saw any kind of dip in the market, and this also dipped, I like being a buyer right now of dips as opposed to chasing momentum in stocks like this. I mean, if you're looking at a stock, let's put up another one that I don't think I gave you, EA Electronic Arts.
Oh, we talked about this, Dennis.
Remember this is AB stock.
Yeah, the football game.
Yeah, and now this is exactly the opposite of what we're talking about with Rivian and SLG. This is a momentum stock. Look at that action that goes way back there that it hasn't totally broken out of yet. So this would be another one that I would take a look at if you're more of a momentum trader. I like to bring something for all different types of traders. As a momentum trader, if this thing starts breaking out of this wide base, you just have to go long and, of course, have risk controls, but assuming that this has a lot of upside to it. And then the other one that I really, really like that just came up for me is Mosaic, MOS.
What does this company do? Is it like a financial company?
No.
No.
Fertilizer.
Oh, okay.
Yeah, fertilizer. So, with the situation that we have now with certain crops starting to have issues because of drought and things like that, fertilizer is obviously something that's needed around the world. There were stories you could see when we had that huge run that fertilizer was in shortages, and that's why we had that big run. And since then, it's come off a lot. But I like this sort of area here around 29. I don't think is a big rush to get in, but it's something I'm watching because if it can start to clear and really hold over the 29 level from a technical standpoint, it could have some nice upside there. That's probably more of a shorter term type trade than a Rivian or an EI or even an SLG.
It looks like it's due for a pop at some point, Mosaic here. I mean, the chart's
Can't go down forever.
Yeah, it can't go down forever. Come on, let's go by.
Well, that's a winning endorsement. It can't go down forever.
It can't. All right.
Dennis, remember we talked about, and Aaron, Joel wasn't on the show, Ulta. And that's
Yeah.
So Ulta, had this great reversal bottom, and then Warren Buffett came in and bought a shitload, and it went way up. But it reports actually Thursday after the close.
Yes,
and that's another one I'm watching. This is part of my vanity, based on the whole diet drugs thing, trade, a beauty shop that looks pretty good. I saw Kohl's was up today. So I would still keep my eye on this. If Buffett thought it was a good one and I liked it even before he did, I'd love to see a dip to 350 to get back.
Yeah.
But if not, if you want to chase it, I think if it can really take out like 400 and the rest of the market is decent, then that might be such a bad one too.
Usually not a bad sign.
You can do worse things than chasing Warren Buffett.
I was going to say the same thing. All right. Well, Mish Schneider, we love bringing you on, of course, talking about the American family, talking about the consumer. And we appreciate you coming on Benzinga's Pre-Market Prep with us this morning. We'll catch up with you soon.
Thank you so much for having me. Bye, guys.
Thanks, Mish.
Of course.